Hi everyone, K-Team here from Traders Club. Hope you guys are having a great weekend, and I thought I'll do a video update here for you guys. And I tweeted out yesterday that I think that we're possibly be in this true correctional mode. And let me just kind of explain what I mean by true correctional mode. Because here's what I think. Let me just go back here. We're looking at Spider daily chart here. What I wanted to do, I want to kind of give you guys what it means to have a correctional move. Obviously, you guys remember last time this was a Thanksgiving, after the Thanksgiving weekend there, after last year. And what happened was we had that correctional move. So this was a correctional move. This was a correctional move. This was a correctional move. So the characteristics of correctional moves is that stock gets to a certain price, kind of overvalued, and then what happens is it needs to correct to come back to kind of a market value, if you will. And then once the correctional move is over, it resumes its the uptrend of this primary uptrend, right? And so, if I just go back further out, you can see that, when we get these correctional move, you can see that that's a correctional move there, goes up, correctional move, goes up, correctional move, goes up, correctional move, goes up, correctional move. So when we just look at these moves, obviously, once we get these correctional move, it resumes in an uptrend. But one of the things I realized of recent quote-unquote correctional move, we did not. What happened was we had quote-unquote correctional move, and then it should resume. If any, the worst case is to come down here and test it as a new resistance, new support kind of thing here, and bounce and gap back up. But we didn't do that. Instead, we gapped down. Again, we're looking at daily chart here, and we gapped down. We've broken below this pivotal level here. Obviously, when we go to line chart here, you can see that we've broken below that last few days, and that is why I think that we're in that true correction move. There's other signals which I'm going to get into. So what happened was we got the correctional move, and then we jumped, but we were not able to resume in an uptrend. So we came down, and then we jumped, we broken above the resistance, but we rolled over. And we're rolling over, we haven't completely rolled over. So let me kind of give you guys perspective. What I mean by perspective is this. As long as we hold this level, we're not looking at Spider, apologize, we've been looking at Diamond this whole time when I was talking there. Now we're looking at Spider, but they're very similar. Anyway, so, his perspective is this: as long as we hold this level, this is an established uptrend. This is a very, very strong uptrend level. We start breaking this level, that will be the first signal of its reversal happening. That will be the confirmation. So again, what I'm saying is we have an early signal of reversal. We do not have a confirmation. What I mean by early signal is when we broke this right here, this pivotal level, because once you make new highs like this, you want to come back to test this as old resistance, new support, and bounce. And again, resume its uptrend after a correctional move, resume its uptrend. And we did not resume, and we're coming back down. And so the argument is, well, we're going to have another pullback, and then we're going to bounce. We could, anything is possible in this market, but as far as the probability is concerned, you guys know that I cannot trade with guesses and feelings. I can't just start guessing that we're going to, bounce at that level. Though it looks to be very, very strong, bullish, as well established uptrend. Let me give you guys a little scenario here. This was a back in. Let me look here. This was back in 2011. 2011 May. Okay, this is a May and July and August here. What we had was right there. This was a very solid uptrend. We broke them below. We went back to test it as a new resistance, and then we came down. What I'm saying is this. Here, let me make it so you guys can see it and you can compare what I'm trying to say here. why I am comparing recent price movement or price action or and chart pattern, looking at last May to today, which I think is very similar to last May or 2011 May, which is right here. First of all, this was you could say that this was a correctional move, and we went higher, but we failed to resume uptrend. So if I just draw a line like this, we poked this head up a little bit, but what happened? We came right back inside. Does it look similar to, guys, right here? We had a quote-unquote correctional move, and then we went up. We failed to resume an uptrend, and we came down. Right? We're not able to hold this level right here. Hold this level of this pivotal level that we've been talking about, old resistance, new support, and you can see that we're coming down right here and right there. Old resistance, we came down, kind of fizzled around it, and we came down here. So what I'm saying is, this recent chart pattern right here, we've been talking about this for a while here at Traders Club for months, for about at least 2-3 weeks. That you guys remember that I did a price target 174 in Spider, which we were not get today. We got to about 171 at best, so I was completely wrong about that. We were not able to get that 174. Well, that level was actually inspired by studying this chart pattern with some Fibonacci levels, and we didn't get that. But as far as the sentiment is concerned, you can see that how after a correctional move, what you want to see is that continuing its resuming its uptrend move, and we didn't get that, and we poked our head up, and then we kind of start rolling over here. So what I'm saying is, again, it doesn't have to be completely exactly same as 2011 May, the way it played out, but this is at least a roadmap, because this is how Spider likes to deal with in this kind of situation. Okay, there's a certain ways in its personality, in its attributes, it works in a certain way, it deals with in a certain way. Again, it doesn't have to completely exactly play it out the way it is, but at least we know that it's a possibility. So you could say that we're somewhere in this vicinity here. You could get back up and test that, once again, and then roll over. So that's what I'm saying here, is that once a correctional move happens, usually what you want to see is that you want to see this thing, usually what you want to see is you can see that old resistance, new support, tested it, and then go higher, right? And that's usually the case, right? Goes up, test it, old resistance and new support, and then we at least, a few weeks or so, it resumes in an uptrend. What happened was, in this one, we broken the resistance level, and then we came down, tested. Instead of going higher, we fell below. And when that happens, the sentiment changed. The characteristic changed. And that's exactly what happened over here. We get up, and then we fell over again. Okay, so that's what I'm saying, is we have a very similar characteristic as 2011 May here. So what I can see is that this thing coming down, if this level don't hold, what I can also see is this thing coming down, testing it, come back up, and then comes down. Something we saw right here. Here, you can see the 100 SMA right there. See that? We bounced, bounced, bounced. We came back to this level, resistance, resistance, and then roll over. So what do we see right now? We see that 100 SMA right here, comes down, get back up, come over here, resistance, right? Let me redraw that, 100 SMA. So if this is this right here, is this, can get up, resistance, and then come down to where? It came down to 200 SMA right here, and you could come down to about 200 SMA right here. That's what I'm saying. And once it does that, I think, what do you think it's going to do? It come down, 200 SMA, and, by the time it comes down, 200 SMA will meet them right here, somewhere here, and then it bounce back out. Let me close up. Right? 100 SMA, and bounce back up to this level, what do you think we're forming? Left shoulder, head, right shoulder, and this thing could really, really think. Does that mean that, I mean, again, I'm doing predictive charting. Again, as of today, we do not have any confirmation of that sort that that's what's going to happen, but the sentiment is playing out very, very similar to 2011 May. So, let me give you this, because we know that this uptrend support must hold, and we must make new highs. What I mean by must make new highs, it needs to break above 171 to clear these two levels, and the uptrend resumes. If in that case, you know, forget about everything I said, and we are going higher. However, we find support here at 100 SMA, comes down, it gap back up, we come back here, resistance, gap down level, which provides instant pivotal level resistance. We roll back down, comes down to this pivot, 200 SMA right here, and if we roll over from this level, there's high probability that we're gonna break this uptrend support. This uptrend support that we held here, here, and here. There's high probability we roll over at this level. There's high probability that it's gonna come back down, and we're gonna break this level, and we're gonna come back to about 200 SMA. And at 200 SMA, there's also high probability it's gonna bounce, because remember, it's not for stock to be in this uptrend. This is a bullish, major bullish uptrend. It's gonna take time to crack for any kind of major correctional move. It's just not gonna tumble down, especially when we are trying to, you know what I'm trying. When bulls dodge bullet here. Not only they bulge dodge there, they bull dodge bullet there. I mean, this was a fierce uptrend that we've had since the Thanksgiving of last year. So it's going to take time to crack this thing. And if anything, if bears need some kind of ammunition, they need head and shoulder as their weapon. And if that happens, ladies and gentlemen, I think this thing is coming down probably about this level right here. And again, I'm giving you guys kind of a long-term possible forecast. As far, I have to continue to remind you guys that I'm not trying to, you know what I mean, just give you these different predictions, but these are the possibilities, so you have a roadmap. I've given you possible to the upside scenario and possible downside scenario. The reason, and this is the thing that we talk about here at Traders Club every single day, is a possible scenario. You know why? Because it's not gonna get you you know what I mean, shocked or surprised when something happens. We know exactly how to deal with it when certain thing happens, because once we get shocked or we get paralyzed, we don't know what to do. You know what I mean? Because you know, you need that quick intervention. Something goes against your trade to either get out or hold or add more, adjust your stops. That's a very, very important. To be able to do that in a quick time frame is to understand, we still understand, what the levels are looking at, or what possible outcome is looking at. So when that outcome happens, you know exactly what to do. Boom, you know to do that. If that happens, if it goes higher, then you know how to do that. So there's a reason why I'm giving you these different possibilities. But as far as last few days concerned, I really believe that we're in spider right here. We're believe somewhere in this vicinity, and this thing is going to come down to test that 100 SMA right here, and then probably bounce, and then we get a correction move there. And here's another way that I can confirm that is when I look at spider on MACD. You guys remember that I've been talking about this chart pattern, which is inspired by 2011 May chart pattern. Not only, I think that it looks very similar, but MACD also confirms that it's also similar to today. First of all, this is right here. This is February, and then it formed until about May. So it took about 3 months to form this bearish divergence. What is it right here? Okay, so this is May, and how long is August? How long did it take? 3 months. You can see that it took 3 months to build this bearish divergence, and the longer the period is, the more potent it becomes, because as you can see, these bearish divergences, they're usually early reversal signal and possible correctional move on its way, giving us the indication that possible the correction move is on its way. It doesn't always play out, but it has a high probability that it does play out. You can see that this time it did not play out. You see that this time did not play out, but you can see here, they all resulted in correctional move, but they, it only formed in about a month time frame. Month here, about a 1 month and a half, but these were the 3 months. Those are the big bearish divergence. So I just given you the chart pattern earlier that telling you that this spider looks a lot like May 2011. You can see that not only the chart pattern is telling us, also MACD confirms that it looks a lot like May 2011. So definitely warning signal there, and this is why I think that characteristic has been changed, the sentiment has changed, and we are high probability in my sense, that due for a correctional move. I don't like using word like do or should, because there's nothing is due, nothing should, anything can go in this market. But one thing I always talk about here at Traders Club is that we can't trade off of guesses and feelings. We gotta go with the high probability setups, with that setups that has high probability outcome. And in my opinion, because of the fact these chart patterns and MACD confirming that we are, we're probably going to have bumps here and there. We're going to have bounces here and there. But when we're looking at a big picture, it's very, very important for me as a swing trader and position trader that I understand what the possible outcome is next month to about 3 months. And that's why I look at daily chart, and I do not look at like intraday charts, because I'm not a day trader. So this is very, very important to me where it's going. And I'm sure a lot of you, there's a lot of swing trader out there, in my opinion, and also long-term investor. This is definitely a warning sign on spider that we need to pay attention. And so again, let me give you just a quick maybe short-term view, what I think possibly could have. There's a few things could happen here. At least as far as a short-term view is concerned, is that, well, you can see that right there, that gap level right there. Well, we can find what we can do is the next few days we can get back up and test the level, or we can come to about 100 SMA and then retest it and then come down, or this thing can just gonna start tumbling down. But what I'm saying is, as long as this level holds, as long as we don't start breaching this level and closing above this gap area, we would have to assume that this thing is gonna come down to 100 SMA, and it's gonna come down to this level about 157 on spider, which will then meet with about 200 SMA. Alright, so these are two levels to watch out right here, about 167.30 at pivot, and 100 SMA somewhere about 164-ish, and then this level right here, 157.22, which is a 200 SMA. Here's the one last thing I do want to share with you guys before I go. Actually, I will talk about Apple as well. Let me very quickly do after this. One of the things, I've been talking about this for months now, that because we've been having this massive warning signal on transport. So transport is kind of, peculiar that transport formed this rising, this massive rising uptrend channel, and then it just tanks. Rising uptrend channel right here, right? And then it tanked. Again, it's ironic, and in my opinion, it's peculiar that we formed this, declining downtrend, declining channel, and then we thrust higher. But when we form rising, inclining channel, it hangs. Declining, it soars. Inclining. We haven't tanked yet. We can't even get back up. But look at where it's at today. We're right there. We're right at that 100 SMA. You can see the last time we 100 SMA here, we broke them below 100 SMA. This thing tanked. So this has been a warning signal for a while, but I have been kind of ignoring it because we haven't had other indices confirming it. But last few days on Spider, Diamond, and Qs and all other indices, also financial, which I'm not gonna get into today, financials are looking weak. Also with Google tumbling down, IBM, and all. If you look at every single bank stocks, they all look like they have a double top, a bearish divergence. Financials are looking really weak. When financials are weak, that's kind of an internal signal that market is weak at the same time. And then I just shown you the spider with the bearish divergence, 3 months making on the spider. Also the chart pattern that is very, very similar to 2011 May. And then we see that transfer doing this. This is when you put all that together, that's why I think we're getting into true correctional mode, not just kind of a pullback mode where it's going to pull back and then resume in an uptrend. And I think that this time around, there will be some bounces here and there, but I do think that this is the time that we're going to seriously think about the correctional mode happening here. So that's what I think about the market here, and let me actually go through just a few. Let me just talk about Apple here real quick. It's already went to 20 minutes, but let me just talk about Apple first. Here's the first thing. I know Apple, when we look at daily chart, it looks beautiful here. We closed above this level here. Now for the first time ever since the crash, we're trading above all the moving average. You guys remember on my blog, I've been talking about that. Watch for 50 and 100 SMA crossing. That will be the early indication of this thing coming out of the slump, and that's exactly what happened. We closed above 50, 100 SMA, and then that's what it did. And we closed above 200 SMA, 200 SMA, and 10 EMA start crossing here. And next probably resistance somewhere. I am thinking we can get to about 153 or so, or 130 or so. But here's a concerning thing on the weekly chart, which I haven't been talking about really. And here's a thing that I've been watching is this 100 SMA. Okay, this 100 SMA right here. This is the weekly 100 SMA. This is the last level. As far as the moving average is concerned, you can see that last time we took 100 SMA, this had that, that rollover. I don't think that this 100 SMA is going to make the Apple go, no, I don't think that's going to happen. But you guys know what happens after any kind of a double bottom pattern or head and shoulder pattern or triple top, triple bottom. What it likes to do many times, it likes to come back down, retest this level as all support. This is a new resistance, all support, and then bounce. But we're right at the 100 SMA. Last week we closed right at 100 SMA. That's not coincidence to where we didn't get above, or because last time we took the 100 SMA, we did this. We're right at the 100 SMA here. So that is, we don't, as far as a the candlestick is concerned, since last Friday, we do not have a definite signal of reversal. Yes, it doesn't mean that you're going to start short here without any kind of reversal pattern. No, but at least it's something to look at and say, what, there's a weekly 100 SMA right there, so this is definitely some level to watch out. And this right here, this looks starting to look more like a bullish pennant, which could break out to the upside. And it's amazing how this whole market's been very bearish the last 3, 4, 5 trading days, and yet just Apple soar in that tough market condition. And that also gives you the resiliency of this of Apple, which I do think that it can go higher. But when I look at weekly 100 SMA, that's concerning, but doesn't mean that I'm gonna I'm still long, but that doesn't mean that I'm gonna start closing it down and then start shorting. No, I need a confirmation before I can able to do that. So again, as far as tangible evidences are concerned, what I mean by tangible evidence, the price concern is it still looks bullish. As of today, we do not have any kind of bullish reversal signal as of today, and we looks like bullish pennant, which could, in my opinion, as far as the daily chart is concerned, it looks like it wants to break higher, probably go to about 530, maybe 550 after that. But when we look at weekly chart, we have that 100 SMA that is just kind of there to give us that level to watch out. Lastly, before I let you guys, let's look at GG here. You guys, if you guys been following my blog, you guys understand that we had that inverted head and shoulder. I went long here, added some more there. I took some out here, also took some out there. So I'm still long. And you can see that we pretty much had confirmed inverted head and shoulder, just like what I said about that double bottom on Apple. What it likes to do, these Head and Shoulders or any kind of reversal pattern, it doesn't always happen, but more than not, you know, it just like to. You can see that we're finding a little bit of resistance here at 200 SMA. It likes to come back down, test this new old resistance as new support, and then gets higher. So, you know, I'm thinking that might be happening here in gold, and you know, it looks like we had a phenomenal run, 1, 2, 3, 4, 5, 6, 7 days, a phenomenal bullish run here. And I wouldn't be surprised and to come down here, and when it does come down, that's probably the level I would like to add, and then this thing could you know, continue higher. And I think that with this inverted head and shoulder confirming on GG, I think that this might be the ultimate bottom there. Also, this is a level where the 100 SMA is hanging out. This is a level, you can see that 200, actually this is 200 SMA. This is a level, is an old support, which could that become resistance there, but you know, probably coming down to retest this inverted head and shoulder level, and then probably next about 38 and then 44 and 47 there, which I think that in time we can get there. It's gonna have up and downs. You know, gold never really have this smooth ride. It's gonna have a big thrust, and then it's gonna have these shenanigans, like it's gonna come down fast as well, but then it's gonna make that, you know, higher low, higher high, and it's gonna get up. But you gotta be aware, because you go at times it's gonna do shenanigans like this. See that how fast it came down before it came back, going back up. So, well, hopefully this video has been helpful to you, and thanks for staying about 25 minutes. But I think these are information that you can really use in your swing and position trading next few months or so. And if I can do anything to help your trading, I'm thankful for that. So have a great weekend. And again, oh, I do want to tell you guys that this coming Wednesday, let me just pull. This coming Wednesday, I do have a free event coming on live midweek update. It's a monthly event I do. It's completely free. It's a live webinar. You can come and ask me any questions. You can able to hear me, and you can able to ask questions. And this is my website here, twotradersclub.com. If you go down, and you can see that this August 21st, this Wednesday, so we just about 3 days. So, and I can give you guys also update on the market, just kind of plus what I shared today. So, you know, just click on here and you can sign up there for free. And it's, again, it's a monthly event, it's a free event, and it goes about an hour. And I'll go through the market indices and some of my current positions, kind of give you guys a heads up on some of those like Apple and gold and things like that. I give you a heads up on those. So, you know, hopefully you guys can sign up for that, and you know, you can come and hang out with me and ask me some questions if you have any. So again, I will let you guys go, and have a great weekend again, and I'll talk to you guys this Wednesday right after market close. Is that right after market close? I'm not sure what time you guys close, but it's 3 o'clock for my time frame, but it starts right after market close coming Wednesday. So